What is up? What is up? What is up? Welcome to the show, guys. We are back on this interesting Tuesday. We got a lot to talk about. Now, I'm pretty sure you guys are aware of the news. We're going to be getting into a lot of things today. I'm gonna try to speed through them pretty quick. I want to go too fast, but there's a lot of things I want to get into. By the way, when it comes to the Bitcoin fork, it looks like Sailor, a lot of Bitcoin maxis, a lot of institutions they're not really happy about this Bitcoin improvement proposal. It's going to be 110. We may get into that, but I want to get into what's going on with the market essentially, because there's a fictitious pump that's actually happening, and you can see some of the stocks are actually starting to actually correct pretty quickly. Bitcoin is doing exactly what I thought it was going to do, between 60 and 64, even with this news that we have. We're going to get into a little bit of this news because some of it is fictitious, especially inflation. If you're on the ground, you know that's a fictitious number. Inflation is way higher. The actual CPI numbers, the PPI numbers, all of that, there are missing metrics there. So when you're dealing with, I think my phone, what the hell? I think my phone's ringing. When you're dealing with these numbers, when you're dealing with these things, I got to put my phone on mute here just for a little bit. Okay, so threw me off a little bit. So when you're dealing with these fictitious numbers that are manipulating the market, sooner or later, everything is going to catch up, right? And you're going to have this correction. This is what I see in the market. It's causing a lot of people to move in, because I'm looking at the RSI. A lot of people are getting a little FOMO because they're seeing a little green, but I have to tell you, things that are actually going on when it comes to the Middle East, it's not de-escalating. It's actually escalating at a rapid pace, okay? So when you look at these oil shortages that we got coming, not at this immediate time, but if you look at further down December, let's go ahead and go all the way to December. It's predictively all the way there. It's not going to look good. The Cushing's report. And the reason why I'm talking about this is because it correlates to buyership. It correlates to how these institutions are going to move in and out of Bitcoin. And that ETF vehicle, this is basically what we're going to talk about in our first segment, along with the rotation out of centralized AI, where that is actually going and how that's going to benefit certain altcoins that really don't need the Clarity Act to actually do great things going into the next 5 years. So we'll get into that. That's going to be our second segment when it comes to that, the AI versus big tech, decentralized AI. So you want to stay put for that. So, because I got two really good actual platforms that I think they're doing their necessary, things here to fortify their foundations for proper growth. So this is what we're going to be looking at, but I want to dive right into what's going on with these numbers. You have a treasury reporting a deficit, and then you have these CPI, PPI numbers that are saying everything is good. And then you have escalative activities in the Middle East that's going to cause major disruptions in oil all over again. We're going to look into that and a whole lot more. Let's go ahead and get into it. So let's go ahead and get into this chart. We'll get into the news too as well. By the way, TVL really ramped up. It's almost over 3%. We're talking global TVL, and I'm talking about that total liquidity lock within decentralized finance, which is the core of crypto, as you already know. And if you've been in this space for a while, I'm pretty sure you've generated some decent yield. If you're playing the game right, you're generating yield. You're going into these DApps, and by the way, hopefully you're not going into the Cardano ecosystem, because a lot of those DApps are very insecure, and I'm pretty sure you know about the news. We're going to be talking about that. This is going to be the last segment about, is Cardano actually dying? I necessarily believe so. I believe so, and I think Charles Hoskinson, he knows, he sees the writing on the walls, but he's so deeply embedded, it's going to be very hard for him to actually move out. That's what I believe, and we'll get into those theories and why the community is so shook right now. But currently, you're looking at $64,000 Bitcoin, which it should be where it should be, considering it's extremely performing, extremely less lacquer than I would thought when it comes to all that. I estimated a way higher actual predictive notion when it comes to the price. Kathy Woods did as well. A lot of these institutions, their predictions for Bitcoin at this point in time, if you look back 6-7 months, it was well over 100K. Obviously, they were wrong, because you can't predict anything at this point in time. This is a new market. Everything that we're seeing here are new normals that are being set. And if we keep getting the escalated factors that we see overseas, if that explodes, you talk about new normals. I don't think we are ready for those new normals that are going to roll into 2027, especially when the correction really, and I'm talking about a real AI correction takes place. Because if you see, I don't know if you've been looking at SpaceX. Wow, massive correction going on with SpaceX. And you have an IPO, we're going to talk about that here in a little bit, that's happening overseas, that is probably going to shake up the AI game, because that's a more decentralized approach, and we'll get into that. And they didn't spend a lot of money building that AI out, and it's going to go full blast IPO probably sometime next year. Bitcoin is sitting at $64,000. It's up 4%, but for the wrong reasons. This pump right here, this had a lot to do with a lot of manipulated numbers, and a lot of the institutions, they gobble those lies up and they buy that particular news. Unfortunately, that causes FOMO, that causes a residual buying at the bottom, because a lot of people just follow what institutions are doing and the ETFs are doing, their news cycle, right? They just follow that. So this is a lot of lemming behavior, if you understand what I'm saying. This is lemming behavior. This is people following the pumping of Bitcoin. And there are a lot of altcoins that are doing that as well. Top 35, a lot of them that are pumping. There are a select few that have substantive actual pumps, and I will call them dinosaur pumps. And we'll get into those three because they have substance. But a lot of them, like Cardano, we know what's going on with Cardano. It shouldn't be pumping right now. There's a lot of negative sentiment, but it is pumping because of the actual news cycle, the hype, the fictitious numbers that came out today. Because if you factor in the PPI and the CPI, and the fact that those earnings reports that no one wants to talk about, we can clearly see the IBM stock actually cratering because they are losing money. A lot of the actual earning reports were overclouded by this fictitious CPI and PPI report. You couple that with the earnings reports from a lot of CEOs, okay, which were negative. You couple that with the actual treasury report, a deficit. We shouldn't really be pumping right now. And then you couple that with geopolitics that are absolutely going the wrong direction at this point in time. Strait being closed, double blockade, 20% tax is what Trump is saying. He rescinded it, but he's tacoing out at this point in time. So and we're used to that, right? We don't know what Trump's going to do. But all of that combined, markets should not be pumping it. And the stock market is starting to actually see that. I think they're tired of the bull. I think the dumb money is actually starting to get smart here, because I'm going to probably show you something here in a little bit when it comes to not only IBM, but you see the bond market really reacting violently to this, especially the 10-year. You see oil actually moving the way it should move, really close to 100. Once again, we're talking futures, spot price 150. So when the rubber meets the road, when all of this manipulation loses its steam, these markets are going to correct very violently. And I'm not just talking about Bitcoin. I'm not just talking about crypto. I'm talking about stock markets, equities, commodities. Bond markets are going to even correct even more violently. Tech stocks, AI is going to correct. And when the AI correction actually happens, that's when you're going to see a lot of centralized AI actually completely collapsing. And a lot of that money is going to flock to the decentralized approach. I'm talking decentralized AI. We're going to get into that in the second segment, because that's where it's going. So inflation hasn't cooled. That is a lie. The PPI is a lie. All right. I want to show you something here, because the actual retort, and I got to tell you, the IBM thing, it should really scare people, because those earnings, if you think IBM is losing money, think again. All of them are reporting massive losses. And wait till you get the fourth quarter losses in 2027. That's what's going to scare everybody's pants off. All right. So I want to get into this, because this is really, really interesting here. A couple of things here that we're going to get into, and especially when it comes to the actual Clarity Act. Now, I want to share this. Now, the Clarity Act is a major thing. We need this to couple, or to be coupled with the Genius Act. The Genius Act cannot exist without the Clarity Act. A lot of the stablecoin activity, a lot of the actual movement, payments, all these blockchains that are set up for stablecoin activity, they actually need the Clarity Act and the Genius Act to plug into each other. They're two pieces of a large puzzle when it comes to not only anti-CBDC activity, but these stablecoins that are going to move profusely, not only within our country, but across the board. But we're just talking about America. We need this Clarity Act big time. It has hit a massive roadblock, and August the 8th, I don't think that's going to be I don't think we're going to get there. Next week, I don't even think we're going to get a markup because there's ethics involved here. Elizabeth Warren is on the warpath about the ethics, and I totally understand that. We don't want a lot of we see manipulation right now. We see how Trump and his family has a stronghold over crypto. We seen the meme coin grab, right? We see World Liberty Finance and where that's going as well. They're trying to sell off a large part of that right now, but I digress from that. So whole nother video. The Clarity Act. This must pass, or we're going to miss out on an opportunity. This is coming from Trump, but he's actually telling the truth. We're going to miss out on a lot of opportunities, and a lot of activities are going to go offshore because that language is already solidified. It's a whole lot more draconian. But with that being said, it's already there. It's in place. And, you know, if you comply, you're going to prosper without any roadblocks, right? We don't have that. And I don't think we're going to get it because there's DeFi issues still involved. There's the actual stablecoin issue. The banks, and I'm going to read this too. This just dropped. The banks are actually saying, hey, wait a minute. We're not done with this, you know, stablecoin argument. We're not okay with the actual compromise. Let's go back to the table. So that is coming into fold again, along with the ethics. You have DeFi Safe Harbor, which I think that's a done deal, which is great for, you know, these platforms and projects and coins that are looking like securities right now. You're going to get a pathway to move under the CFTC, I believe. I'm pretty sure that's what it is. That's going to be over the digital assets and the actual commodity side of regulation. The SEC is going to give you a pathway. I think that's pretty much it. And, you know, that's great for a lot of actual, you know, situations that are in limbo. They don't really classify or actually under the umbrella of an actual commodity. They're kind of in limbo where there's that safe harbor language. And I think they pretty much solidify that. But when it comes to ethics, when it comes to, you know, the actualities of the actual Genius Act and the actual Clarity Act actually needing to be plugged together, there's still those massive issues with ethics. And that's unfortunate at this point in time, because that's going to derail the whole entire bill. And if they pass it with this ethics provision, and I got to tell you guys, Trump is not going to sign this bill. He's not going to sign the Clarity Act in law if it's loaded with really, really hardcore ethics provisions. He's not going to do it because that kind of like treads across what he's already established, you know, in his family when it comes to World Liberty Finance. All of that has happened prior to the inauguration up to this point, it kind of walks over that. It kind of like, you know, negates that. So the Clarity Act, man, I don't know. I just don't know. Now, this is what I want to actually read, because the actual stablecoin situation, this is not over. Now, this was just reported here. The Clarity Act faces pressure from 78 United States banking groups once again over the stablecoin rules. So this is the banks. I told you guys years ago, if you've listened to me, crypto is a threat. DeFi is a threat. And this is the actual other side of that threat. This is who is receiving the heat. 78 US banks. Okay. They're coming back together. They're coming to the table because we don't have a markup. There's negotiations, ongoing. And like I told you guys, when it comes to the actual Clarity Act, when it comes to what is going on here, again, ethics is a big thing here, not DeFi Safe Harbor, right? None of that. All of that is good. But the ethics thing is what's stopping this. Now you add in the stablecoin situation. That is coming back. I honestly do not think we're going to get this Clarity Act. I really don't. So in a joint letter, the senators or the Senate leaders that are representing this banking group, the groups warn that the bill could allow stablecoins to act like bank deposits and pull money away from community banks. So there's that mantra again. Wait a minute. We're going to bring this back. I thought we already, moved to compromise. This is what I thought. I thought we had a compromise here. Obviously, we do not have a compromise here. So we're back to that. That is coming back. Now, there's some interesting comments in this situation. I love David and Henry here with this comment. The monopoly of the banks is coming to an end. The future actually offers yield to the people, giving them more than 0.0%. And that's a great point. This is basically the traditional yield that you were getting, unless you're doing high yield Roths and things of that nature, but it's nothing that compares to DeFi. So I love that post. Nothing that compares to DeFi. Now, I want to move to this U.S. Treasury post. All right, this is from the Kabasi letter. Now, this is rolling into the pump. We're talking about this pump because we want to move into the reality of things and what's really happening. But let's consider this, inflation report pump, because this is essentially what it is, fictitious pump. Now, this was tethered, and I'm talking CPI numbers, PPI numbers, which are all fake. Inflation is way higher. It is not cooling, and I guarantee you we're going to get rate hikes. Warsh is going to raise these rates because he's looking at real numbers. And by the way, he's already put a committee together to actually investigate all of these numbers that have come out in the last 5 years. So he knows what's up. Now, this was breaking right along with these inflation numbers that are reported. And by the way, a lot of the earnings reports, you haven't seen those, have you? Everybody's looking at IBM, but we didn't get that report. Like we're getting these fake CPI and these PPI numbers. We didn't get that IBM report, the earnings report, all right? That Capitol Hill actual meeting that a lot of the CEOs went and they had to get under oath to actually say, hey, this is what we earned. This is what was lost. You're seeing IBM reacting to the losses. This is going to go on throughout the year. Okay. Now, this one really hit hard. The United States Treasury posted a $120 billion deficit in June, a sharp deterioration from the $27 billion surplus in June 2025. So all that was decimated. Okay. There's no surplus. Now, this comes as the government receipts dropped negative 31 billion year over year to 496 billion. The decline was largely driven by a surge in tariff refund payments, guys. We don't get this report. I think the Kabasi letter is the only one telling you the truth about the tariffs. CNN is not. MSNBC is not. You're not seeing this in your local paper either. In X, I think the Kabasi letter is the only one that's actually reporting this. You remember those tariffs? They're actually having to refund those payments. Okay, so I'm gonna read this again. And this is bad. This is really, really bad. Really, really bad. So the decline was largely driven by a surge in tariff refund payments after the Supreme Court ruled the tariff increases illegal actual takings of monies, now resulting in a negative $26 billion net deficit in customs duty receipts. And so instead of those beautiful tariffs, those magnificent tariffs, bringing money in, right, for infrastructure, for manufacturing, starting that, right, for paying off the debt, it's actually going in the wrong direction. And I don't even like to laugh about this, but I think people need to know the truth. All right, we are not growing. The United States is in a bad situation right now. And then you couple that with the geopolitics, not good for the stock market. What we're seeing is a fictitious pump. This is why I'm reading this. This goes along with my actual, earlier monologue. We're not pumping. This is fake what you're seeing. This is manufactured. And you can already see the retractions. You can already see the actual stock market and the dumb money, like I like to call it. They're actually really starting to open their eyes to this. The manipulation, I don't think it's going to be able to work too long. And that's the bad news. Okay. So in the first 9 months of the actual fiscal year of 2026, the US deficit rose $29 billion year over year to 1.37 trillion. This is the third highest deficit at this point in the fiscal year in history. Over the same period, net interest expenses rose plus 78 billion year over year to 827 billion, on track for the highest annual net interest expense on a record. The US deficit crisis is on freaking steroids right now. And then you couple that with what's going on in the Middle East. And I have to bring you this because we talk about tech being the forefront of the actual movement in the stock market. It's just tech. It's just AI, that build out, which is very robust. I hope it works out because the stock market has actually been built on top of this actual belief that AI is going to build out and it's going to be 100% successful and it's going to be amazing. And this is going to pull stocks up to phenomenal values. This is why you see a lot of rotation going into AI right now because of that mantra, because of that notion. Government institutions are backing it, all that good stuff. Anthropics is looking absolutely fantastic. By the way, I watched an actual, I read a report about AI that really opened my eyes about AI. Is artificial intelligence really actually what it is? Is it real? Are we really looking at artificial intelligence? Some would say no. A lot of smart people are saying this is not AI. It may exist, but what we have is not artificial intelligence. I don't know. It's a good question, but I want to bring this to you because this is interesting. Now, what we're looking at here is Elon, obviously, with his Doge hat. There's an Iranian flag here. Now, I'm going to read this. This just dropped. The Iranian military has said that Elon Musk's Starlink infrastructure is a legitimate military target at this point in time. Now, I'm going to let that sink in, because not only is that a legitimate target, there is a massive complex, massive infrastructure when it comes to AI, data centers, data essentially, that is harvested, that is actually being housed there. Lot of actual tech infrastructure in this area. This is why I think what Trump is doing is very, very, very not so cool, because not only is Elon's infrastructure in the crosshairs, if all hell breaks loose, a lot of data is in the crosshairs, a lot of infrastructure when it comes to oil has already been destroyed. Our bases have been decimated. You factor in Elon's actual interest. If it starts to, if bombs starts to, take out Starlink's infrastructure, start taking out a lot of AI and data infrastructure, if the bombs hit the tech, you're going to see a retraction in the stock market like you've never seen it before. You're going to see massive rotation out of stocks and out of crypto and out of Bitcoin like you've never seen it before. This is where we're at. This is why I think we're looking at this pump. We're looking at this actual stock market pump. We're looking at crypto pumping, looking at Bitcoin, which is really, Bitcoin's values are very weak. It's not strong at all. Bitcoin is so weak right now, but you wouldn't know it because of all the chatter on X and about what's going on. You see it in the news chatter. You see all these fake metrics with PPI, CPI. You see all these numbers. Inflation is cooling. It's cooling. Everything is good. Institutions pump the market, and it manipulates thought patterns. It manipulates the mindset of a lot of investors and institutions. This is what's very scary to me right now, because when all this manipulation runs out, and it's starting to hit a wall, I can see it. A lot of the dumb money is starting to actually figure it out. When dumb money figures out this, all hell is going to break loose in these markets, because dumb money is what's pumping it. Dumb money is what's keeping it going. I'm just being real with you. This is what's up with this. So with that being said, I want to move back to this. This is just one more thing I want to say here. And by the way, the IBM thing is absolutely crazy when you look at this chart. And this is merely an earnings call. This is what a lot of corporations are going to start reporting. And this is what their stock is going to start looking like when they report that they've lost billions of dollars last quarter. If you think this equates to a booming market, you better think again, because we're just getting started with these earnings reports. We're about to roll into a tumultuous retail season where no one's going to be spending a lot of money, because a lot of people have lost their jobs. Their checks aren't going as far because inflation hasn't cooled, and they're saving. Retraction season is what I like to call it. People are going to start pulling back on their spending. And this is what causes international business machines like IBM, which is basically the acronym for IBM, to completely collapse. Look at Apple raising prices on the MacBook. All this, they know what's coming. They know it's coming. No one's going to buy inflated prices. Look at the automotive industry. They're collapsing because no one has the money, and people being smart. Again, dumb money is starting to turn the page. People are starting to think smartly about their finances. And when investors start actually thinking and realizing, hey, we're about to head into a major AI correction, they're going to start pulling out too. So, obviously these are my predictions, right? We're just going to wait and see, and by the way, as we move back out into the market, we'll get into the first segment here. This just dropped here. President Trump announces a full blockade on the Strait of Hormuz. Trump has also stated that he will replace the 20% U.S. reimbursement fee with a trade and investments deal with the Gulf countries. He's going all over the place. I really think President Trump is sick. This man is very sick. He's all over the place, all over the force. I don't even think anybody's listening to him. In fact, Iran has said we don't even know what he's talking about. And by the way, they just hit a UAE tanker today. And apparently there was bombs going off in Dubai. So this is really out of control. And then when I seen this tweet, I'm like, okay, we really need to buckle up. A lot of investors really need to actually get their portfolios together. Get right. If you want to take the fall, I totally get it. If you want to hold for dear life, I get it. I understand. If you're in too deep, I totally get it. I understand. But we need to get ready for what's coming. So $64,000 is where we're at now. And again, you have the micro pump, fictitious pump when it comes to stocks, when it comes to CPI, PPI. Bitcoin was kind of tethered to tech because it did move because of the actual inflation numbers. So we have that tether back again, but I think there's going to be a divergence here as well. You can already see Bitcoin is already starting to correct. You already see the sales that are coming in. People, again, dumb money is starting to turn the page. And that is not good for these markets because these markets have been dependent on dumb money to actually hold these floors, along with the institutional inflow with the ETFs, and, things of that nature. And we like that. Obviously, we love that. But how, sustainable is the floor? And the floor is the ETFs. I mean, it is what it is. The floor is the ETFs. So I'm going to go to that dashboard actually. And this is what was reported on the 12th. Now, obviously these are delayed numbers. So, and I would argue that we're still in the actual negative range when it comes to ETFs. 424 out the door. We're talking $1 million. Is that, just under $500 million. ETH is bleeding as well on the ETF front. So when you factor in the ETF vehicle, that floor, institutions, they're actually rotating into AI. That's the pretty interesting part about this. The rotation is going towards AI, and we're going to get into that in a little bit. And I wanted to actually, let me pivot back to this because this was very interesting too. Before we get into the rest of the show here. Now, you remember DeepSeek. This is that IPO I was telling you about earlier. DeepSeek is preparing for an IPO. It may file as soon as this year. This is per Bloomberg. Now you probably wonder, why are you talking about this? Because this is going to crash tech. This is going to be one of the actual factors here. Now, the company, because if you look at SpaceX, which SpaceX is really not a space company, but they call it SpaceX, but it's really not a space company, but I digress. That thing is correcting like crazy right now. Trillions of dollars lost. If you bought at launch, you're red right now. Some of those IPO guys, the ones that bought, years ago, they're still in the green, but they're getting pretty close to being in the red too. But I digress from that. The DeepSeek IPO is very interesting because number one, this company is reportedly in talks with accounting and banking advisors, and the IPO is expected to be listed in China. Now, DeepSeek has begun talks for a fresh funding round valued at around $71 billion. This is a massive competitor right here. And they built this very cheaply, very cheap GPUs, especially when they were, I think NVIDIA was barred from selling them. They didn't care. They use very cheap GPUs. DeepSeek is a beast, okay? They're about to hit hard. Now, amid rumors of the IPO, DeepSeek is now looking to expand into the authentic or agentic AI market. AI market. They're moving, okay? The AI arms race is accelerating. So you add the actual DeepSeek situation in to the race. You have SpaceX collapsing. You have a lot of Anthropic's decentralized platforms, which is going to get into that. Heavily regulation coming. A lot of governmental regulation is coming to centralized AI. That's causing a rotation into decentralized AI. And then here comes DeepSeek saying, you know what? Hey guys, we're still here. This is an interesting recipe for a major correction in tech, and that is your floor. That is your stock market floor. And that's your Bitcoin tether as well. Very interesting. So we'll move back here. So roughly a consolidative effort. It's a pretty good gap, but from 60 to 64, this is what Bitcoin is going to do. It's going to do until it breaks that $60,000 floor. Now, once that happens, we're going down. Now, you get up there towards 65, 69, up there towards 70. I think if you breach 75, I think that's when you're going to go up to maybe 80, 89, but I don't think we're ever going to get there because there's so much downward pressure when it comes to what's going on in the Middle East. That situation in the Middle East has to de-escalate, and we got to get the hell out of there. And Trump has to get back focused on being the crypto president. That's what we need for prosperity here. The tech is already ready to go. The bill is ready, barring some markup issues, and we should get a fresh markup with the Clarity Act. But I have to tell you, it does not look good. And I hate to even bring this up because people hate for me to talk about this, but if we go through midterms and the Dems get the majority, I think they're going to roll back a lot of this crap. I think they're going to stonewall a lot of the actual crypto language. They're going to put it on the back burner, and we're going to be stuck into 2030. And Charles Hoskinson has already said this multiple times, and I believe him. This is why he doesn't want to go back to the White House. He's seen the way the sausage has been made for years. He didn't like what he saw. So I believe in, Trump has good faith because he wants to, prosper in crypto as well. So he wants these bills to be moved. But here's the thing, him stalling out the housing bill for the Save America Act, that brings me a lot of trouble as well, because what if he does get the Clarity Act and he does not get what he wants with the actual Save America Act, and the housing bill is still sitting in front of him as well? Does he skip over those two situations and actually sign the actual, Clarity Act? I don't think so. I could be wrong, but I don't think so. So it's very interesting. It's very interesting. Now, just to actually add to the fold, now I told you guys about this ETF outflow, which is a major issue that no one wants to really focus on because of this fictitious inflation number that just came out, CPI, PPI reports, inflation cooling, blah, 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 which is a bunch of BS, bullshit, okay? No one wants to focus on what the Kabasi letter is posted with the treasuries reporting massive deficits due to the tariffs being refunded, and the fact that inflation is actually very, very heated on the ground. No one wants to talk about that. And the fact that we will get rate hikes. I'm sorry. This ETF situation is a big deal. This was supposed to be our floor. And I want to talk about this before we get to the next part of the show here. This was supposed to be the floor. This was supposed to be what was going to move us to 100K. This was supposed to be the dependable sponge, essentially, that could soak up all of the negative activity and keep us afloat. And I'm talking $75,000. This is what we were told. It's actually doing the actual opposite. It is a massive vacuum. And this is what we're seeing, especially when oil is steadily creeping up to around the $100 mark again on the futures markets. When these big boys start shaking and start moving, they move Bitcoin in the markets very, very abruptly, because this is a lot of money, guys. So here's the headline here. Bitcoin ETFs lose over $424 million, wiping out at last. We're talking about last week, just $500 million. Let's go ahead and say it. That was just last week. All the gains have been decimated. We're talking well over $2.5 billion worth of outflow to date. I think it's even higher. It's probably $4.5 billion if you factor in all the actual institutional outflow, the rotation there. Spot Bitcoin ETFs shed $427 million on July the 13th. Okay, reversing prior weeks, which brought in around 200 mil. This was the inflow last week, and turning July into a red. Now, normally July is a rebound month for Bitcoin. If you understand the cycles, which I always tell everybody, you need to forget about the cycles. They're dead. They're so dead. Well, these are new normals. We're looking at a new normal, new pathways here. But everybody wants to keep their head in the sand. Everybody wants to think about, oh, the cycle, this cycle. The cycles are so freaking dead right now. But I think a lot of the old treads, they just don't want to let that shit go. But the cycles are dead. These are new normals. I gotta tell you, these are new normals. I'm gonna shoot it to you straight. I don't care if you like it or not, because I love you guys. And I don't want you guys to lose your shit because you're heavily invested in this market. You're believing this hype. And that's all it is. These are major indicators here of massive losses that are going to occur going into the fourth quarter. But a lot of the maxis, they don't want you to know this. They don't want institutions and retail to move out, because then that's when they're going to lose their shit. They depend on you for liquidity. So they're going to lie to you about what's really coming. Green days are not coming. Maybe 2027, Q4, 2028, Q3, Q4, maybe. I feel good about that. But right now, we're about to go through one of the worst times you've ever seen in crypto. And a lot of it has to do with outside, outliers. The Middle East conflict. That none of that was baked into the cake. Number two, a quick take on this ETF thing. FBTC and the IBIT, big, huge. You're talking Fidelity, BlackRock, big time actual vehicles here drove most of the actual swing. So when I tell you the ETFs are the direct opposite of what we thought they were going to be earlier this year, I'm not joking. You're talking about the three big, kahunas here. They're the ones that are selling the most Bitcoin. And then you factor in Michael Saylor. That is the icing on the cake. That is going to be the proverbial icing on the cake when strategy starts dumping, because they are on the cliff right now. And they're looking over it right now. They're gauging and they're calculating, what's going to happen when they hit the ground and how soft or how hard they're going to, how many parachutes they're going to deploy. This is what's happening with strategies right now because they're on the edge. Completely over leveraged. Massive Ponzi, if you really want to talk about it. Truly. Stretch is a Ponzi. So you have these huge vehicles that are actually moving and swinging to the wrong direction, showing early rebounds. But that all depends on rather the actual broad ETF demand continues. And I got to tell you guys, going into this third and fourth quarter, that demand is going to dwindle. Now, the funds now need fresh inflows. We need new narratives too as well. No one's going to talk about that. We don't need the same BS that we saw the last 5 years. The same blockchain tech, the redundant copying and pasting. That's the last thing we need. We need new narratives, new inflows, new money, new ideas, fresh ideas that can actually be leveraged by real world entities, especially when we get this passage of the Crypto Act, the market structure is what I like to call it, because that's what it is. Everybody calls it the Clarity Act. It's market structure. That is market infrastructure. And that plugs into the back end of the Genius Act. And that's when stablecoins are massively implemented. And then that particular flow, that's going to pull Bitcoin, Ethereum, alts, infrastructure along with it. But without market structure, that ain't happening. And that's going to be a bummer for these big vehicles, FBTC and the IBIT. If we don't get that plug in, and this is what I heard over the weekend, and I thought it was greatly said. The stablecoin initiative is like a cell phone with no network at this point in time. That network is market structure, and they are dropping the ball. And I blame it on Trump because the ethics is what's making this so hard. And along with the stablecoin, I understand why the banks are very, very scary. If I was a bank, I would be shaking in my boots as well, because I'm looking at account flights. I'm looking at people basically taking their money and moving it into decentralized finance, because that yield is way greater than 0.0.1, 0.2. I think credit unions are even at bottom level yield right now, which is crazy to me. But I digress from that. Spot Bitcoin ETFs post $424.7 million of net outflow, guys. This was this freaking week. More than twice the 197.4 million that they actually attracted across the previous 5 trading days. So that is massive retraction. So when you're seeing this green in the market, don't be fooled. It's fool's gold. Don't be fooled. The stock market, the dumb money in the stock market is already reacting. They're already pulling back because they know that they're getting tired of being fooled. Okay, with these fake reports. When the real report with the government refunding tariffs, nobody's reporting that and how that has increased a massive deficit. The earnings reports from all these industries and all these companies, these CEOs that basically saying we are losing our shit, guys. All right. Yeah, that's not being reported. Only the Kabasi letter is what I saw that's reporting what's really going on. So this one-day loss pushed the cumulative balance of July the 6th, which was pretty robust, to a negative $227 million, following the first follow-through test after the prior week ended and 8 weeks of outflow streaks that we actually saw. So this is what I say. We're talking BlackRock and Fidelity, big, huge vehicles that are like, you know what, we're teetering here, guys. Our vehicles are not garnering the demand, the massive demand, product demand that we thought that it was going to garner. So what are we doing here? And BlackRock has a major issue with private credit basically imploding up under them. According to the Farside investors on July 13th, Fidelity lost another 245 million as well, along with the BlackRock situation, which recorded over $200 million with their outflow. So listen, guys, this is what I want to say before I move on, because I got to get into my segments. This particular vehicle is going to be, this is a double-edged sword, and we're on the other half of it. We're on the bloody side of it. Okay. So we're talking massive movement here in this vehicle. The actual demand for these products are down more than 25%. Okay. This is Bitcoin's floor. This is the floor of Bitcoin. This is the floor of the space. So if you couple in the fact that we do not get the Clarity Act, if we don't get a markup next week, I think that demand is going to dwindle even more, because you have to have the Clarity Act, market structure bill, and the Genius Act, they have to be welded together. They are two pieces to this one massive puzzle of adoption. This one massive puzzle of stablecoin activity, product activity, infrastructure activity being moved into the real world, adopted. There's a lot of situations that don't need this, but that is minimal. The majority of the market and the majority of the actual infrastructure and the technology needs the Genius Act to be plugged into the market structure bill. This needs it. So I think Trump needs to, if he gets this bill, forget about the housing bill, forget about the Save America's Act bill, sign the Clarity Act, get it out of the way, get it in there. I don't care if you don't like the provision, the ethics provisions, get it in there, because we are going to fall so hard if we don't get this Clarity Act bill, because that's the only thing that these actual vehicles, the people who are investing in these ETFs, the institutions, the investors that are coming into the market, buying these dips, AI even needs this as well. They're waiting on that. And if they don't get it, it's going to be very bearish. And we're going to go in the wrong directions. And as you can see, the 60K full floor is very weak for Bitcoin. This is a very weak floor. And the reason why I say it's weak is because look at these freaking ETF vehicles. The demand is down well over 20%. They're selling like crazy. People want out. Strategies, that is about to explode. Implode. I like the implosion word better for strategies. And Michael Saylor is probably going to get sued in the next 5 years. That Ponzi is imploding. So, and that's a lot of freaking over 800,000 BTC that's wrapped up into that potentially imploding. This essentially, if this perfect storm works out, and I'm not wishing this, but I'm just putting it, nobody's talking about this. If this perfect storm works out, Bitcoin can credit all the way down to $40,000. And that is going to send a shockwave across the board, because a lot of institutions are already heavily bought into this notion. They already heavily bought into the AI movement. When these things collapse, a lot of people are going to lose their shit. Will they come back? Who knows? Now, we'll just see. We'll just see how this happens. I want to move on into more substantive things, essentially. By the way, TVL is almost 2%. And I want to flip to this because I love DeFi. I'm in partaking into DeFi as well. You have Mica, that actual beautiful EU language. It's actually DeFi Llama is tracking those exchanges, those actual, and this is if you like to partake into things that are compliant. You have this tracking available on DeFi Llama when it comes to these exchanges, their volumes and whatever. It kind of gives you the inside scoop on which exchanges are actually solving, which ones are actually very strong, because there are a lot of exchanges in the top 10 that are not very strong at all. They look strong, they talk and they walk like they're strong, but they're really not infrastructurally. You can get a lot of that data on DeFi Llama. I just wanted to push that, but stablecoin market cap is cratering, is what I'm saying. But the actual overall value across the board when it comes to TVL, it's actually moving up. And of course it is, because of the actual fictitious manipulation. But as you can see, there's a slight divergence there when it comes to the stablecoin market cap. It is down almost 1%. Huge cliff dive here. So, I mean, it is what it is. And speaking of one of the dinosaurs, we're going to be talking about Uniswap, the fee juggernaut is what I like to call it. When it comes to the actual change, when it comes to Uniswap, it's almost $3. I think it's over $3 per coin now, which is a great coin actually. 90% up when it comes to the spot change, when it comes to the activity, when it comes to DeFi. So when you're thinking about TVL, Uniswap is like number one when it comes to global TVL across all the chains. It is the beast. And that's something we're going to be talking about here in a little bit. So I want to get to that. Let's go ahead and get into that actually right now. Let's go ahead and start moving. So this is the reality. The market panic, July 2026. I want to talk about this because you're seeing a fictitious pump. Now, I want to tell you what's really happening, because 62 is where we're going to probably level out at probably in a couple of days, because I don't think there's going to be any de-escalation. I want to talk about capital rotation, because before this fictitious pump, this placation, this is what's occurring, and it's still occurring, but you have these fictitious manipulations, and they're doing the same thing with oil. Every time oil spikes, watch, you're going to see Trump taco out, and he's going to say everything is cool. We're talking to Iran, because when oil moves really close to $110 in the futures markets, this is when Trump, he starts retracting from the aggressive natures here, because he knows that's a powder keg moment. And I guarantee you, and we're getting there. So he's probably going to come out another day and say, everything is okay, guys. We're talking. They want a deal. They want to make a deal so bad. And we're making a deal. We're talking. And then oil is going to go down. That's that manipulation. They're doing the same thing to the crypto market today. They're doing the same thing to the stocks in the AI today with these fictitious PPI and CPI numbers, this fictitious inflation report. It's the same thing Donald Trump has been doing to oil. You have to spot the manipulation so you can move appropriately in these markets today, because these are new normals. Lots of manipulation. It's really terrible, but it is what it is. This is a new normal. So I want to talk about this a little bit more, because what you're seeing here is, and this is, I'll go ahead and say it. This is what I'm, people are panicking, but you do see an AI boom that's actually killing a lot of cryptocurrency at this point in time because of that notion. Look at what SpaceX did. It usurped a lot of money. A lot of rotation went into SpaceX, and look at SpaceX now. It's an alligator. It's so much of a clamp right now for a lot of investors, especially the ones that bought post-launch. God bless you, because that thing is down. This is what I want you to think about. The broader market is currently sitting at extreme fear. You may not think so, but it is. Now, this particular score that we're seeing here, it was at 28 before all this manipulation. I'm talking the fear and greed meter. Now we're looking at 38 because of the manipulation. This is how easy it is to manipulate markets. Bitcoin is hovering between 60 to 64. You can see the 64 is going to be that high between this particular encapsulated actual capture of Bitcoin in the way it's consolidating between 60 and 64 roughly. Structurally, it is absolutely weaker than it's ever been before. And I'm talking within the year. We're going into a 2-year period. And again, cycles are dead. Now, we talked about the ETF outflows, the institutional money that was supposed to make markets deeper. It's pulling back. You can see that already. We already talked about that. Also, the actual AI rotation. We're talking about that capital that has been leaving very, very abruptly. Crypto market, infrastructure. It's rotating into an overheated AI race. And it's related to equities. Now, I want to ask you guys, are we in a bottom out process? Or are we in a post FTX style crash? Is that looming as well? Because possibly we could be looking at that, another FTX style situation. Now, I have to mention the fact that the SEC is highly anticipated to release and to actually finalize what I was telling you, the safe harbor proposal for DeFi projects and token issuers. This is a big deal, and no one's talking about this and I think this is a done deal. We're just waiting on stablecoin yield argument to subside, and we're waiting on the actual ethics provisions to either be implemented or for Elizabeth Warren to pull back. Everything else is ready to go within this bill. So we have a lot of committees that are going to be submitting their actual text, and we should get a markup next week. But with that being said, this particular agenda here, this DeFi safe harbor proposal, it's a go. And this is going to usher in a lot of actual activity that is under the SEC's guidance right now. We're talking securities. It's going to provide a pathway or a blockchain test to where I don't want to say it's like the Howey test, but it's going to be kind of like that, to where you're going to be able to prove that you could move and kind of transition from SEC guidance to CFTC guidance, which is where you want to be. So when you're looking at rotation from BTC, ETH, SOL, XRP, which you are seeing prior to the actual manipulation that we've had today, the last couple of days, all of this is going into decentralized AI projects. And we'll talk about that a whole lot more here in these two that I want to mention. We'll talk about why. We're talking about AI infrastructure is getting in a lot of rotation, AI computation, decentralized AI, AI agents, that's getting a lot of rotation as well. Data and modern marketplace infrastructure that you have, and you see that with Render, that is getting rotation as well. A lot of the rotation that you're going to see going into the fourth quarter, the scared money, this is going to be their safe harbor, decentralized AI, because of what has happened with centralized AI. This rotation is real, guys. It really is, because of the actual constraints that the government has put on Anthropics. That seems to be easing, but these decentralized AI projects, you need to get to know. You need to do the research on a lot of them, like Render, BitSensor, a lot of these ones that are primed and ready for this rotation and this adoption. You better do your homework on it, because they're at bottom prices right now. They're dipping very, very hard. These are the ones that you buy in the red. You don't buy everything in the red, but these are the ones that are solidified, because that rotation is real. It's actually on chain, and it's happening. And it's going right into these decentralized AI projects big time, because of how they're built, because the centralized front is being heavily restricted by the government. Look at what happened to Anthropics model. We all know this. OpenAI, right? Grok, Elon's situation, not so much. But if his infrastructure is hit by missiles, which the Iranian, government has already said that this is a legitimate target, SpaceX, Elon's interests are legitimate targets here. That could be interesting, but I digress from that. It's a whole different notion. So I just wanted to bring this to you. The market panic is still real. July is not going to be green like traditionally the cycles have foretold. We're going into a red July, guys. This is going to be the first one I've seen. It's been a while, and it's going to be very robust. So markets move in cycles, obviously. Fear creates opportunities, but these cycles that we're used to, broken, completely broken, and they're dead. And we're seeing the formations of new cycle patterns, new normals within the stock market, within the crypto market, equities, commodities, metals. Look at gold. Who thought gold would be pushing almost 5K? No one can tell me they predicted that. Look at copper. No one's paying attention to copper. And I will tell you this about copper. If the AI build out actually succeeds, copper is going to be one of the most missed out opportunities that anyone has ever seen. Copper has made moves big time. I think it's up 16%, almost pushing $7. Copper is going to be well over $1,000 freaking dollars if this AI build actually comes to fruition, because they're going to need copper and some other metals as well. But specifically, copper is going to be an absolutely amazing investment, and no one cares about it. I do. I'm investing in copper. Bought it at $4. So I just want to put that out there. It's part of this AI rush, part of these data center build outs, very productive, very precious metal. And it is continually marching up. The chart, look at the chart. Just look at the copper chart. I don't have to keep talking about it. So let's move on to the next one. Decentralized AI versus big tech. I really want to get into this one as well. Because this one is something that I just need to tell you guys. So, because there's so much noise. So you want to talk about where you really need to be looking at when there's red in the water. Decentralized AI is where you need to be looking at. The US government just gave crypto AI its biggest catalyst. This is a massive altcoin narrative right now, guys. After US placed export restrictions on Anthropic's models in June, traders started rotating heavily into decentralized AI tokens. And it's on chain, you can see this, because centralized infrastructure has suddenly hit a wall and is looking very, very fragile. Now, specifically Anthropics, but you know, this always rolls downhill. So the US government put these very, very staunch restrictions on not only Anthropics, but there's some other models too as well, and completely banned DeepSeek, which is seeking an IPO right now. I think you can still actually get access to the application on Google. I believe so, but here's the 4 points here of the actual restrictions of centralized AI, which is causing a major rotation into decentralized AI. Export controls on advanced chips. We saw that with NVIDIA. Computation and data restrictions, which is weird to me. Model scrutiny and safety mandates. We saw that as well. Global market access limitations as well. This is not good for centralized AI. Anthropics is threatening to sue the government because of these restrictions. We see some easing of the models restrictions, but when it comes to the other 3 factors here, especially with the export controls on the advanced chips, that's a problem for centralized AI. Now, here comes the rotation, because institutions are like, you know what, there's another format that we can actually roll to that doesn't have these freaking issues, and it's called decentralized artificial intelligence. Open, permissionless, and it's accelerating big time. BitSensor is one of the ones that I've already been invested in. Render is an absolute great situation as well, and there's others, but these two, I just want to talk about these two. Now, they've actually showed some life on the charts as well. They're looking really good today as well. BitSensor was under $200. It's now almost $206. So if you caught it at 199, let's just say you bought it at 199. You know, you just found it. You're looking at this ETF news here with BitSensor, which is decentralized AI, a platform ecosystem. And you're like, hey, let's go ahead and play around. You know, you made a little money. It's almost $205 right now from 199. Now that pump was there's a lot of substance to this pump with BitSensor, and we'll get to Render in a little bit. And we're talking about this AI rotation out of centralized AI into decentralized AI because of the restrictive nature, the government restrictions that have been put on centralized AI. This rotation is real and it's happening. Now, BitSensor has an ETF filing that's coming up. They're really serious about this ETF. This ETF movement is actually in motion, growing institutional interest as well, along with this spot ETF filing, which is in motion as we speak right now. The market is actually seeing TIO, which is the actual ticker here, as a core AI infrastructure play. This is ongoing. You see it in the chart. You can see it in the actual underlying factors of growing institutional interest here. That mind share when it comes to BitSensor and what's going on with centralized AI. Institutions, the actual people are wanting to get involved that not only use these actual models, but actually invest in them as well as their own and leverage them with their businesses. They're moving to these platforms because they don't have to worry about the actual government intervention here. They don't have to worry about the regulation, the restrictions, because we're talking about GPUs here. Decentralized AI is a completely different monster here. Now there's a risk here, but look at what's going on with decentralized AI. So Render is another one to want to, put into the fold here, because you have this massive GPU expansion, over 10,000 GPUs with a recent partnership that was announced here with Render, which they did rebrand to Render. The ticker is not RNDR. I don't think it's RNDR anymore. I'm pretty sure. I think they rebranded actually. Yeah, so the ticker is Render actually. So they did do some rebranding. It's currently at $1.51 here. BitSensor is at $201. Pumped pretty hard today, but that's Bitcoin pump. But the actual pumps previously was because of this great news, this great rotation here. The ETF for BitSensor, the actual partnership that's going to be bringing massive expansion to the actual GPU factory that they have here with Render. Explosive demand for GPU computation is exploding right now, especially on the DeFi front. Network scaling is breaking the actual scaling aptitude when it comes to Render is breakneck speeds. So that's another advantage as well. Real world usage in the AI, media, and metaverse capabilities. Render is actually getting real world usage as well. So these are just two that are benefiting from this actual rotation out of centralized AI due to government constraints. So when I tell you these things are happening, but they're being overshadowed by a lot of manipulation, Mideast situations, a lot of smoke screening on social media, the news, This is when I tell you need to really dig down and do your research. This is what I'm talking about. So you can find these gems that are actually in the middle of massive dips right now. Some are all-time lows. They're going to come back with a vengeance post-language, post-rotation. You want to be in these, particular situations, especially render at $1.51. BitSensor shares the same actual market cap as Bitcoin, 21 million. So these are good projects, and they're going to be used. They're not going to be thrown away. So render, BitSensor, and I have to tell you about the Grayscale and a Bitwise actual ETF that was just filed for BitSensor. This is why that thing pumps so hard. Institutional inflow interest is real with BitSensor, and a lot of that is being rotated into it from centralized AI. They're very scared about these US government restrictions here. They're testing a major support here with $200, but I got to tell you, this thing is going to rocket ship up, especially with this actual market cap mirroring Bitcoin. If everything works out with AI, especially with decentralized rotation, BitSensor is going to explode. Now, not financial advice. Do your research, obviously, but you need to be very, very conscious about what's going on with this rotation. Not only capital going, movement, not only the ETFs, not only the Middle East, the macro, but what's going on with AI on a decentralized front. There's some really cool movement here that's coming out of centralized AI projects and going into decentralized AI, and you need to get involved here so you can catch this run up, especially with render. Render is the one that's, I think, is more approachable for a lot of people because it is sitting at $1.51. BitSensor is not as attractive because it's a $200 coin right now, but you have to understand the actual market cap. Token supply is what I mean to say, not market cap. You have to be mindful of the actual token supply. It shares the same token supply as Bitcoin. So it's going to move differently than render. There's more of, I think render's over 600 million when it comes to that particular market cap. Tim, what's going on, bro? He says AI is here, but still needs work and better infrastructure. Absolutely. Well, I think centralized AI has put the carriage before the horse. That's why you have this rotation going into decentralized AI platforms now because of all the restrictions. You don't have that with decentralized AI. It's expandable, like you can see with render, with the GPU expansion. That partnership was really, really good for render because now they have more computational power. BitSensor, ETF. And again, let me get back to this ETF because BitSensor, that Grayscale Bitwise ETF is real. They've actually filed that with the SEC. The decision is actually expected in August. So if we can really get this crypto language market structure plugged into the Genius Act, signed and sealed, a lot of these these decentralized AI ETFs, these altcoin ETFs, they're going to fly. They're going to fly because institutions are going to run to them. They're going to produce new all-time highs. Now, a lot of them aren't going to be substantive because a lot of these altcoins that are going to pump, they're empty. They have no value. The dev teams they're incognito. They're going to cash out. They're going to cash out, but they're incognito. They're not really building anything that's going to be leveraged. So that's going to be unfortunate. But these ETFs like BitSensor, Render, Chainlink, Undo, these ones that are, stellar. I used to say ADA, but I don't think so. ADA is going through some problems. We're about to get into that segment, but I have to tell you, be mindful of what's going on. The render thing is very interesting. Now, the actual BitSensor thing, obviously the ETFs, the institutions love that. Bitwise, Grayscale, they love that. But the render thing, they just approved a government's vote for the actual Solid Technologies as an exclusive subnet operator, adding roughly 60,000 consumer GPUs to their network, right? And this is going to be, inducing more AI training and interference demands. This is going to skyrocket this situation, along with the institutional inflow that's rotating out of centralized AI. So I don't want to go too long on this because I got to get to these bizarre rallies, this really, really interesting rallies with Zcash, Bitcoin, and Bitcoin Cash and Uniswap. But be mindful of what I just told you about the decentralized AI gobbling up of this centralized AI capital. That rotation is real because people like open source. They love permissionless, capabilities, and it is accelerating. And these two are leading the fold here. with massive news. So we'll definitely look into bid sensor and render if I were you guys. Do your research on that if you're interested in decentralized AI platforms. Post language because they're going to fly. As far as centralized AI, it's not going anywhere, but it's going to be heavily regulated. And I don't think the institutions like that at all. Not at all. So let's move on. Now, I know you guys saw this, so we're going to move pretty quickly on this. So I know you guys saw this. Got the wrong tab up. The dinosaur coin rally. Now, we're talking about Zcash. We're going to talk about why that happened. Bitcoin Cash as well, which is going to be very heavily entrenched in payments infrastructure. It's already built for it. It's very close, and it lines up to Bitcoin. I think people are going to go to Bitcoin Cash. You can see that it's coming off an all-time high, actually. Not an all-time high, but a pretty robust high early in the year, around $500. It lost 50% of that, but everything is down. Bitcoin Cash is percolating as well, but the Uniswap Bitcoin Cash Zcash situation, I want to talk about these specific dinosaur coins because they're OG. They're not very new. They're very OG. Now, when we're talking about Zcash, nearly up almost 20%, it shares Bitcoin's $21 million hard cap as well. And the market is suddenly repricing the scarcity alongside a renewed privacy narrative. Now, when you're looking at Zcash on the chart, okay, this is what you're seeing. You're seeing two pumps. And in the middle of those two pumps, escalation. And I'm talking upward trajectory. And we're looking at it now, a little corrective, but this thing is back almost at $600. This credit all the way down to almost $290 when the dev team collapsed. Now, we thought that dev team collapsed, but obviously it didn't collapse. They're still moving. They're still working. They're actually preparing a major upgrade for Zcash. And I think it had a lot to do with that AI audit, which ETH received an AI audit and it was not good at all. There's some exploits there with Ethereum. This was just found on a validator foundational standpoint, which is not good for Ethereum. Not good for the merger, for the proof of stake movement. The AI audited in the validators. There's a big time exploit there. So ETH has issues there. Zcash received their AI audit and they're preparing a major upgrade, privacy upgrade. As you can see, people like it. Institutions like it. Investors are back, up almost 7% within a 24-hour period amongst all the blood. And they got a little boost too with the actual fake CPI and the PPI and the inflation numbers as well because of the stock market moving up. They kind of follow that as well. That tether there with tech. But I digress from that. The Zcash substance, I want to actually separate that from the actual manipulation because there's substance here with Zcash. And this is why I want to bring that up. This is why these are the three dinosaurs that I want to talk about because that particular Zcash pump is real. There's no fiction there. There's no manipulation there. There's actual upgrades coming. There's actual implementation of new privacy upgrades coming, new privacy narratives. Beautiful $21 million hard cap. That's why when this thing moves, it moves. The price moves very quickly. When big money buys Zcash. Now, Arthur Hayes said this was dead. Yeah. This is why you don't believe what he says, because this thing is going to hit 600 probably within the next 2 weeks. And it's not going to care about the Clarity Act. These dinosaurs right here, they don't care about the Clarity. They don't need the Clarity Act. Bitcoin Cash may. I would digress from that. Bitcoin is the outlier. Bitcoin Cash is going to need the Clarity Act to actually move within the payment infrastructures that isn't embedded in. But Uniswap, Zcash does not need the Clarity Act. Bitcoin Cash quietly is grinding up 17%. Low volume, which is signature of tight, unharried accumulation by whales. So I don't know why, honestly, guys, I don't know why whales are buying Bitcoin Cash, but they are. I know the substance behind it, the infrastructure and what it's placed in it and how it's going to succeed going into the stablecoin run, payments run, infrastructure being leveraged and used for cross-border payments, not only cross-border payments, but institutional payments on an institutional level. Between institutions, yeah, Bitcoin Cash is perfect for that, among other actual coins that are actually payment centric as well. But the Uniswap thing is crazy. This is the fee machine. and it's waking up. And the tokenomics, I like to call it, we call it tokenomics 2.0. The tokenomics are changing. We're having new normals when it comes to tokenomics. The Uniswap tokenomics are really neat. And if you hold Uniswap, you already know, very unique situation. You're getting kickbacks, dividends, if you want to call them that, holding this token. You're getting part of the fee. That's why I like to call it the fee machine. You hold this Uni, token, you're getting percentages of the fees, dividends, right? You're getting kickbacks just by holding it. It's waking up, seeing double-digit gains as well within the blood. DeFi activity, I told you, we talked about TVL, I'm sorry. Global TVL is up. Uniswap is the #1 bringer of this, the #1 gatherer of this TVL, and the #1 gatherer of these actual fees. So these three dinosaurs, Zcash, you're probably not interested in that. This thing is almost $1,000. It's almost back up to $600. So a lot of people are like, I'm not buying Zcash. I get it. I totally get it. I bought it back in a long time ago, early 2000s. This is an OG coin. These are dinosaur coins. Uniswap, I think it's still a great buy, and you're getting kickbacks. You're getting percentage of these fees. Do your research on it. But this DeFi centric fee machine, fee beast, #1 on global TVL when you look at it across the board, across 45 chains that make up that global TVL. Uniswap is implanted. It's not going anywhere, and it is starting to actually wake up. It continues to prove its worth. So these three, I wanted to single these dinosaurs out because this is what they're doing. They're waking up. And as far as Uniswap, no one should be surprised by this at all. I'm gonna look at the chart here. This chart looks beautiful. And this is Uniswap. This is an OG coin. They have their own, and if you do remember when they deployed their own chain, this pissed off the Ethereum Foundation. It pissed them off because they were receiving a lot of kickbacks. Uniswap was basically handing Ethereum Foundation millions and billions of dollars every year because they were tailored to the actual network. They are not anymore. They have their own chain. They have their own situation. And there was a lot of grumbling when this happened, when they actually became independent. The investors loved it. It's back and it's climbing. You look at this trajectory here, and on July the 2nd, this is when you've seen this massive pump in Uniswap. Okay, and it did consolidate fairly well between 309 and 319, and now you're seeing this really beautiful influx in DeFi activity. Fees generated. A lot of the token holders are like, give me what I want, give me what I need, give me what you owe me. If you're holding this coin, you're very happy. Okay. And it continues to rise. I think you're going to see this at around $10 going into probably a third quarter of next year, because I'm very hopeful. Even though I'm bearish, I'm still hopeful and optimistic about the Clarity Act. We plug that into the Genius Act, you're going to see DeFi fly, because DeFi gets a green flag. It gets safe harbor. You get the blockchain test. So a lot of these decentralized applications and protocols and developers, they're going to be able to move their said or quote unquote deemed securities. They're going to be able to do a test, and they're going to be able to go through these pathways to prove that they are commodity. And if they pass that test, they're going to be able to move into commodity standship and be governed by the CFTC. This is going to be great for a lot of actual DeFi that's in limbo right now. So we have that. We need the market structure. But when it comes to Uniswap, it's going to fly. Look at this sustainability here in this chart. Look at what it's doing. And it's been doing this all through this tumultuous activities that has been going on in the first couple of weeks of July, coming out of June as well. But coming out of the first week of July, this thing is like a rocket ship. And it's a dinosaur. And it's moving. I just wanted to talk about that because a lot of the coins that we forgot about that aren't glamorous anymore and they don't really catch our eyes, you better think again. These solidified platforms are going to move very, very violently. And a lot of them do not need the Clarity Act for this. They just need the market the suppression to subside. They need the manipulation to subside. They need normal market activity, free market activity to ensue. And that's not going to happen until the manipulation stops. It's unfortunate, but that is what it is. That is what it is. So I really didn't want to talk about this, but We got to end the show with this. Then we'll get to the member giveaway as well. The Cardano drama. This is unfortunate, but this is what's happening now. Charles Hoskinson released a tweet. He's saying he's not going anywhere, but the Cardano situation is real. Now, I want to bring up this chart because I told you guys earlier, when it comes to these charts, you may see some green, but it doesn't actually mean that things are all green. It doesn't mean the pastures are green just because the charts are green. I want to roll to this real quick because as you can see, there's a correction that has occurred. And a lot of alts are correcting right now because they understand a lot of, dumb money is becoming smart money. They understand that this is a heavy manipulative activities that are happening right now with these CPI and PPI numbers, inflation numbers. Treasury is reporting deficits. The government is refunding tariffs. And the Middle East is absolutely bonkers right now. So why are we pumping? Because there is heavy manipulation. It is fictitious. Don't get caught up in this because as you can see, this actual 3% pump within the 24 hours is actually correcting within Cardano because Cardano is not okay. Now, I want to get back to this because you have a lot of drama, a lot of denial, a lot of reality and trust issues when it comes to Cardano rolling into the July 2026 era. This is very, very harsh for a lot of investors that have held on to this particular situation. You have Midnight that's in limbo as well. Why did he create Midnight? We don't know. We think we know, but we don't know. This is a quote. Charles Hoskinson said, "These are rumors. They're baseless and malicious and meant to harm Cardano. Cardano is stronger than ever," unquote. I would beg to differ when it comes to the stronger than ever notion of Cardano. I don't think it's stronger than ever. In fact, you look at the TVL numbers, it is not strong at all. Okay. A lot of exploits within those. And I'm not saying it's a network situation, but we had a lot of exploits when it comes to decentralized platforms, applications. You can't blame that on the network. But there's a lot of money has been lost. Millions of dollars have been lost because of the security factors that go along with these applications that are embedded within this infrastructure, the Cardano infrastructure. And Charles has been trying to, make excuses. He's been coming out and saying everything is okay. This is not a network issue. It's not working. Even this Bitcoin pump couldn't save the price. Everybody's selling again. And a lot of alts are correcting as well, by the way. Along with the stock market, it's correcting as well. I'm looking at the Dow. The Dow is starting to correct as well. Tech is starting to correct as well. IBM was completely decimated. You have oil moving up to the $90 range as well. Bond market subsided just a little bit, but the 30-year is still. So everything is starting to correct. Everything is starting to realize that they've been manipulated. So here are the main issues. Network throughput, too slow. 23 transactions per second. It's deemed to be unacceptable, uncompetitive, and undeniable. By the way, year to date, 71% reduction in that price. You have scaling that has stalled. Voltaire, which is the upgrade, it has been delayed. Governance chaos and ecosystem exodus, that continues to accelerate as well. So the narrative is cracking. Is it dead? I don't know if it's dead. It takes a lot to kill, ecosystems of this nature. So if it is dying, it's going to be a slow death, slow bleed. And unfortunately, it's going to have Charles Hoskinson's name all over it. And it's unfortunate because he's a good guy. But I think, it is pretty slow compared to the top. Yeah, Monad, Solana, even ETH is starting to, move into, deep into the Glamsterdam upgrades. Although there's some exploits that have been actually, unveiled within the validator group. I think they're going to take care of that. So is the narrative when it comes to Cardano cracking? The data does not lie. This is a defining moment for Cardano, big time. As we look at the chart, it is what it is. It is correcting along with a lot of the alts. So Ethereum, let's do a price check before we get into the giveaway. $64,000. Bitcoin is not going to get anywhere over $64,000. This is going to be the actual ceiling for the time being, your floor is going to be $60,000. If we breach that, we are going down to probably 50K. And I think if you get infrastructure hit over there, if Iran really starts really roughing up infrastructure, stocks, AI stocks are going to collapse, and then that's going to fold into the actual Bitcoin ETF vehicles. They're going to collapse, and then you're going to see a mass exodus across all altcoins. Let's hope that doesn't happen. Let's hope calmer heads prevail. We get oil moving, the strait gets open, which apparently Iran has dropped more mines into the strait, so it just gets worse. Ethereum, $1,800. This pump. Be careful with the ETH pump, because Eric Trump came out, he posted on this pump, ETH is back, ETH is not back. ETH has issues with the validator stack. So they got problems. But, you know, a lot of investors don't give a damn about that. They don't care about the foundational aspect. They just want this price to move up. So you're up across the board. But it's a fictitious situation. Substantively, ETH has major issues infrastructurally. And they have to fix that. They have to fix that, because you're going to get some protocol hacks pretty soon. You're going to get some network issues, especially if your validator group, your validator nodes in your stack is vulnerable. I don't want to even go, listen, I don't want to even go into what could happen if that occurred. If you had some type of intrusion there on a validator standpoint, and you had some movement within those staked ETH, that could be very catastrophic. That could be something catastrophic that can allow for a lot of blood when it comes to ETH, but I'll digress from that. I didn't get into the tether issues, but BNB is trying to climb back to $600. They're going to be releasing another L1 next year. That's going to be phenomenal for that particular chain as well, and for that the Binance group as well. Can't wait to see what's going to happen there. XRP back over $1.10. It's down a little bit, 1.97. So I was going to say 2%. Solana's trying to get back up over $80. Hyperliquid is doing fantastic. The best perp exchange on earth. Big time. I'm going to be doing a video on Hyperliquid too in a little bit. Dogecoin Zcash is moving back up to $600. Stellar. A lot of these are substantive. You see Chainlink still hanging around at $8. Canton, $13.13. That's a great situation right there. Bitcoin Cash up to 1%. And you have Cardano. We talked about Cardano, fictitious situation there. Cardano's in trouble. Litecoin is trying to move back up to $50 as well. But I got to tell you guys, be very cautious with this situation, because we're moving towards overbought territory. And I got to tell you, this movement, be cautious about it. Now, I want to move to this before we get to the giveaway. Now, oh no, this is the wrong one. Okay, no, we're not going to talk about that. I'll leave you with what I've left you with. Just be mindful of what's going on. I want to go to the actual news cycle here and see if anything has dropped before I get into this. I don't even want to get into Trump, because he keeps going back and forth with these fees. And Iran doesn't care. They just want us out. So we'll get into this UK thing, and then we'll get into the giveaway, because I thought this was interesting. Now, we talk about how important stablecoin activity is going to be prior or post Clarity Act. Plugging into that Genius Act. This was pretty huge news coming out the UK, because you do have a very hardcore language when it comes to UK. It's different than MICA. They don't share the same views. It's a little bit harder. It's a little copy and pasty, but it's more robust, that UK language. Now, the US and the UK actually issued joint statements on stablecoins. This is interesting. The UK Treasury and the UK issued a joint statement calling for stablecoins to be fully backed by liquid assets. Now, we do know that part of the Genius Act, stablecoins are going to be actually backed by US Treasuries as well. You're going to have that mixture, along with a basket of commodities or whatever, maybe some metals, but predominantly US Treasuries and apparently liquid assets as well. So they also emphasize the potential role of stablecoins as settlement instruments across securities and commodities markets as well. We're going to need that market structure bill for this to actually take place here, stateside. And for the US to actually, join in on this, you're going to need the market structure bill. So I hope Trump is actually going to do this. Now, the two countries added that they will, and I hope Basin can actually talk them into it as well. The two countries added that this will continue coordinating on stablecoin policy as adoption accelerates across global financial systems. So this is pretty bullish for the movement because these stablecoins are going to pull everything up with it. You know how Bitcoin pulls the market up when it goes up? Well, the stablecoins post language, when everything is plugged in, it's going to have like a Bitcoin effect. They're going to pull adoption. They're going to pull liquidity upward. And they're going to actually pull in a lot of actual activity when it comes to DeFi as well, because they're going to have that safe or harbor language. People are going to know about DeFi. A lot of people don't know about DeFi. I know you think everybody knows DeFi, but they don't. There's a very, very small percentage of people like you and myself that actually know about DeFi. Well, that is going to change very quick. So this is pretty bullish news. So I like it. We'll see how the market structure bill actually works out. So I want to get into this giveaway and get out of here. So I got to repopulate the wheel. I got to make sure I got everybody on this wheel. Hope you guys enjoy the short. And I think we got Crypto Joy. I got to get Crypto Joy on this wheel. And let me see. I think there's some more. Crypto Joy and Tim Shea. I got to get you on there. And then we'll spin this wheel. So I think that's it. Absolutely. So let's go ahead and get you guys on the wheel and we'll spin it. All right. Let's go ahead and do it. Yeah, I forgot to change the music. It sounds like The Mummy. We're watching The Mummy. So it looks like La La Land is going to be the first winner. Congratulations. We do this every week after the Uniswap. Tim, I had to buy me some more Uniswap. I had to, man. I had to. And don't forget BitSensor and Render. The two dark horses there when it comes to decentralized AI. There's some more to it as well. But I digress from that. Definitely Uniswap. Don't sleep. Giving out a lot of, you're getting fees and kickbacks too. Dividend type, activity there with that Uniswap coin. So very, very decent. La La Land, you're going to be the first winner. Let's get two more. So I'm going to call Ruven Shai, I think it is. Ruvanshi. Maybe it's Ruvanshi. I don't know, but Ruvanshi. I'm going to go with Ruvanshi. You are number 2 on the actual wheel. I'm going to be giving you guys SOL for the winners. Get SOL, and all you have to do is participate, become a member, participate, and watch the content and tell me what you like about the content. And your actual comment gets you on this wheel every week. So Ruvanshi, I think that's how you pronounce that. You are number 2. We need one more. And I think it's going to be Crypto Priest. LMFG is coming up pretty closely. Yep, Crypto Priest it is. So let's go ahead and do a review on that. So we have La La Land 786 is going to be number 1. And we have Ruvanshi. That's going to be number 2 winner. And then Crypto Priest. I haven't seen Crypto Priest on there in a while. So absolutely. We'll get you those actual rewards, guys. Let's see. Tim says, I've held LIT for a while as a beta to hype. Okay, I got you, brother. Oh, man, Hyperliquid. I'm going to be doing a video on Hyperliquid. Man, that thing is a beast. Oh, I wish I created that. I wish I was the principal dev and the owner of that. Boy, that guy's he's making a ton of dough. Huge perp exchange. Big time trading going on there. So Binance, I think, is number 1 overall exchange. I think they actually, I think CZ was talking about that earlier. They're the king of the hill, which that's, obviously nothing about that should, surprise anybody. So I don't see anything else, guys. So we're gonna, with that being said, I don't see anything else. that I can actually bring to you. South Korea stock crashed today as well, setting up a crypto rotation. But the volume is, that's crazy what's happening in South Korea. And they're actually going all in on crypto, which is good. I don't see anything else that I can get to. We need to get out of here. XRP is actually rebounding as well, which is good. Let's go ahead and get out of here with a message here. Be mindful of the actual rotation going out of decentralized AI into decentralized AI platforms. Look at those tokens, look at the platforms, look at the infrastructures that are going to actually benefit from this rotation, because you want to get those in your portfolio. All right. Don't sleep on the actual Uniswap situation as well. Still a good buy. Get you a decent bag of that so you can get some actual residuals from that. Get some kickbacks from those fees. You're going to get a percentage of those fees. It does matter how much of your weight that you carry with your bag. But again, we all like those dividend payments, right? It's not a dividend, technically, but it moves like that, right? It kind of moves like that. So with that being said, you guys have a great day, and we'll see you on the next show. All right, take it easy.